AMD is showing a massive change of character on the weekly chart. In today's video, we perform a deep dive technical analysis into AMD stock history from 2006 to 2025 to project where the price is headed next. In this video, we cover: first, the 20-year history, analyzing the 10-year accumulation phase, 2006 to 2016. Second, price target accuracy, how previous targets of $80 and $256 were hit. Third, current reaccumulation, breaking down the 4-year pink shaded range. Fourth and important, new price targets, why current computations point to $336 to $402. Then how we set trading strategy, the key support levels, $213 to $220, to watch for a confirmed breakout. Before we jump into the charts, if you want to master the markets and trade like a pro, hit that subscribe button and turn on notifications. If you find this analysis helpful, please drop a comment below with the word Wyckoff or ask a question. Your engagement helps the YouTube algorithm push this video to other retail traders who need to get this awareness and systematic approach. Let's help the community grow. If you have not familiar with Wyckoff, I would recommend to watch my educational videos mapped to this in the YouTube card. My analysis is based on the Wyckoff methodology, a structured technical analysis framework established by Dr. Richard Wyckoff in the early 1900s. Unlike lagging indicators such as moving average, RSI or others, Wyckoff focuses on leading indicators, daily price action, and volume. The methodology relies on 3 core principles. Demand versus supply. When demand exceeds supply, prices rise. When supply exceeds demand, prices fall. Cause versus effect. A period of range-bound price action. The cause builds the momentum for the next trend. The effect. Effort versus result. We look for harmony between volume, effort, and price movement. Result divergence here often signals a trend reversal. Now, let's open up the charts and get to work. Today we'll look at AMD stock, starting from 2006 through the present day. Let's walk through the weekly chart, which covers nearly 20 years of price history. The blue shaded box represents a long accumulation phase that began around 2006 and ended in 2016. After completing this accumulation, the stock began its markup phase in 2016 at a price of approximately $1.75. The stock rallied to $164 before the next reaccumulation started, which is currently visible in the pink shaded box. I was able to calculate the move from 2006 to 2018 by determining the price target of that initial accumulation range. Based on the count I conducted through 2016, the price target was between $77 and $82. Surprisingly, the stock respected this level. The move that began at $1.61 reached the $80 to $90 range, where the cause built during the accumulation was fulfilled. At that point, the price entered a reaccumulation phase. For the last 4 years, I have analyzed this reaccumulation range to understand the stock's next move. This is still the weekly chart, but with a focus on recent timelines. This phase is happening in 3 different stages. Because it occurred after an established uptrend, we define this as a reaccumulation. Based on price action and volume analysis, I have been regularly reviewing the trend. In my analysis from the last week of December 2025, I predicted the stock has the potential to reach $336 to $402. Previously, in 2022 and 2023, my computation suggested a target of $214 with a maximum of $256. Again, the stock followed this closely, touching nearly $270 before retracing to trade around $213. Currently, computations show a potential price target of $336 to $402. Looking at current price action, the stock is in an uptrend, and the volume is in harmony with the price movement. We saw a breakout in October with a strong volume of almost 700 million shares, as the price moved from $170 to $213 in a single week. This high-volume breakout is considered a cha. The key factor to watch now is whether this becomes a false breakout, where the price fails to hold and falls back into the previous range. Currently, the stock pushed to $270 after the breakout and is now returning to test its support. For those considering swing trading or short-term investment, we need to see confirmation. We want to see the volume increase as the price holds the $213 to $220 range and begins to push back up. This would prove the stock is continuing its uptrend and has successfully exited the trading range. The key takeaways. To summarize our deep dive into AMD, let's look at the three key pillars of the Wyckoff strategy for the weeks ahead. The law of cause and effect. The 4-year re-accumulation phase we've analyzed is a massive cause. Based on our point and figure computations, the effect points to a potential target of $336 to $402. The energy is there, now we are just waiting for the final release. Change of character. The massive 700 million share volume spike we saw in October was our primary signal that the composite man is ready to move. This wasn't just a price bump, it was a fundamental shift in the stock's behavior. The action zone. For traders and investors, the $213 to $220 range is our line in the sand. This is the last point of support, LPS. As long as AMD holds this level on decreasing volume during the retest, the bullish thesis remains fully intact. Your key action plan. For investors, if you are looking at the long term, watch for price stability at these support levels. A successful test here confirms that the path to $400 is open. For swing traders, look for a sign of strength, a pushback toward $270 accompanied by rising volume. That is your confirmation that the markup phase has resumed. If you have any questions or feedback, please post them in the comments section. Subscribe if you would like to see more videos like this. Thank you.